What's up, guys? It's Rob here, and today I've got a very important, timeless lesson to share with you guys. This is going to explain why, in my opinion, stocks are set to soar quite a bit, right? We've talked about this in the past, but I've never really made it this clear and in such a timeless way why stocks are probably going to be doing very well in the future, and using examples of what's going on in other countries to show and to prove what kind of happens when we see this kind of stuff going on. And hopefully this will all make sense to you by the end, but I'm going to start off showing you guys the stock market right now. Okay, this is the Russells, and the Russells, unfortunately, over the past couple of months has actually fallen to levels that were pre-pandemic. I mean, this is a chart of the past 3 years of the Russells, so smaller market cap stocks, and you can see where we were pre-pandemic, and then I drew a little line to show that just over the past couple of weeks, we've been hitting levels that we were at pre-pandemic and pre all of the money printing that went on during the pandemic. And if you guys haven't heard of the money printing, let me show you what it was. 80% of US dollars in existence were printed in the last 22 months. Now it's a little bit longer, the past 26 months maybe. We went from $4 trillion in circulation in January of 2020 to $20 trillion in October of 2021. Okay, we saw massive stimulus. We saw massive monetary easy policy from the Fed. And all in all, we got massive amounts of cash on our balance sheets, right? Not just on our balance sheets, but everyone, right? Businesses, individuals, everybody got more cash in their hands. And they were able to use that not just to buy products and raise the inflation rate, but they could also buy stocks. And we certainly saw stocks soar during the first part of 2021 and not really so much during 2022, right? Stocks have actually been pretty tame since then. They've been falling. And it's for foolish reasons, in my opinion. When you look at this chart right here, that's hopefully coming across in the video, you can see how much the money supply has increased during the pandemic. I mean, it was just a straight line up. So much money got injected into the system. And a lot of people think that that's actually a bad thing. A lot of people think that that's a bad thing for the stock market because that's caused the inflation rate to rise. And people think that because there's high inflation, that's going to be bad for stocks and that's going to cause stock prices to fall. And while that's happened over the past couple of months, I don't think that that's going to happen over the long term because of historical trends that we've seen in other countries regarding high inflation. Now, first off, I will say one of the main reasons why stocks have been falling is because of the Fed. The Fed has been saying that they want to raise rates, and they have raised rates a little bit. They've been a little bit more hawkish as of late because they realized they were far too loose with their money printing over the past couple of years, and that has caused big inflation, which they don't want to see. But if you actually look at the Fed's response to all this money printing that they've done and to the inflation that they've seen, you can see it's pretty much nothing because this is a chart of the federal funds rate, okay, the interest rates that the Fed sets, going all the way back to 1960. And if you zoom in to the past couple of years, you can see what the Fed rate hikes have actually been. I mean, practically nothing, guys. It's basically nothing what they've done. And sure, they're going to continue doing more, but they're going to continue doing more of this, right? Basically raising it very little. I mean, it's basically nothing compared to what we saw in the 80s or even the 2000s. I mean, it's crazy that this is the Fed's response to the inflation that we're seeing and that they think it's actually going to quell the inflation all that much. Now, it has quelled the stock market, right? Unfortunately, there's been a lot of fear-mongering out there. A lot of people have convinced others to sell their stocks. A lot of people are just seeing that the market's moving down and fear-selling, and that is a big mistake because of these two charts that I'm about to show you, okay? This is the inflation rate in Venezuela. If you guys haven't heard, Venezuela has been experiencing massive inflation. Back in 2019, it was around 35,000% inflation, and even though it looks like on this chart, the inflation rate is relatively low, if you actually zoom in, you can see that even in April of this year, inflation in Venezuela was 222%, and it has been on the decline. But the stock market in Venezuela, you would expect, would be crashing due to all of this inflation. It has been the exact opposite. This is the stock market in Venezuela right now, and it is increased monumentally. And this chart doesn't even do it justice. You actually have to zoom in a little bit. I mean, you can see currently it's at 6,248 points. If you zoom back all the way to 2018, before the inflation really hit, you can see that the stock market was at 0.0031 points compared to where it was now. Really crazy stuff to see. I mean, tens of thousands of percentage point gains have been experienced over the past couple of years due to all of the inflation that Venezuela has experienced, because inflation is not bad for stocks or assets. Inflation is bad for the value of the dollar. And so to be seeing the stock market moving down just because people are fear mongering about a recession, all the while 80% of US dollars in existence have been printed over the past 2 to 3 years, going from 4 trillion to 20 trillion, is absolute insanity, in my opinion, right? I think that in the long term, we're going to see stock prices move way, way up. There's way more money in the system. There's way more capital to be buying these stocks and these assets with. I mean, it's not just going to be stocks, it's probably going to be everything: houses, crypto, all kinds of things, all kinds of alternative assets. Even NFTs could probably see a boon from this. They certainly have, while all of that money printing was fresh in people's minds. But despite the fact that people have forgotten about all that money printing for now, does not mean that the money isn't actually out there, right? Right now, people are reacting in a somewhat poor way to what the Fed is doing. A lot of people are selling their assets. And in my opinion, it's a big mistake. I just use it as an opportunity to buy more and more because I realize the historical trends that we've seen in countries like Venezuela, that when there is massive inflation, that when there is massive money printing, it typically ends up leading to massive returns in assets and not in the dollar, right? The last thing that I would want to be doing when I'm looking at big inflation is selling my assets and holding the dollar. That is the thing which is inflating, right? The dollar at the end of the day is what's inflating away and what's becoming worth less and less in terms of what you can buy. And that goes for stocks, right? You can buy less and less stocks in terms of your dollar as well. And that means stock prices are going up, right? So that's just my opinion, not financial advice. Obviously, I'm not telling you what to do. I'm just showing you guys what I'm looking at. And it kind of hopefully will explain why I'm thinking what I'm thinking and why I'm making the moves that I am. And will hopefully dispel some fear, because a lot of people are fearful of the market when they see stuff going down 10, 20%. They get very fearful. A lot of smaller market cap stocks have moved down more than that. And that just, in my opinion, makes them even better buying opportunities. But of course, that's just my opinion, not financial advice. And if you guys appreciate that, feel free to subscribe to the channel. And other than that, guys, have a great day. I'll see you in the next one. Bye.